Senseonics. If you're watching this video like me, you're probably down a lot in your position, or you might be still up a lot, which then props to you for getting a good entry point. So in this video, I'm going to be breaking down the full truth about Senseonics with no bias. I mean, facts over feelings, am I right? So I'm going to be breaking down this video into 3 parts. First, I'm going to be talking about why Senseonics even ran up in the first place. Then second, I'm going to be talking about why the stock is now struggling. And spoiler, it's not actually all because of the overall market downfall. There's actually a little more behind it. And then lastly, I'm going to be giving my final verdict and my short-term and long-term price target for the stock, along with a quick technical analysis breaking down the best points to buy and the best points to sell. So this is an extremely value-packed video, so make sure to strap in and let's get to it. So now the whole reason the stock was running up in the first place is to one simple reason, and that, my friends, is hype. Senseonics signed a partnership with Essentia, which is a multi-billion-dollar company that's going to be distributing and marketing their CGM devices all across Europe. And so that was a really big deal that they made. And so as a result of that, that brought attention to Senseonics. And when people realized how innovative their product really is and how far ahead it is from their competitors like Dexcom, well, people loaded up the boat and the stock ran to the moon. So now, why is the stock falling? This is the one big question that everyone wants answered. So 2 of the biggest reasons is 1, the overall market sell-off, and 2, massive profit taking by a lot of people. But then people are also worried about further dilution. Let me explain. And I'll discuss this more in my final verdict, but this is going to be a short-term problem for the stock. Taking a look at just the most recent financial reports, the company lost $101 million just last quarter. And then in the previous quarter, they lost $23 million, then $7 million, then $42 million, and then $35 million. And then you also have to understand that the company is only going to be generating 12 to 15 million in revenue this year in 2021. And then they only have 35 million in total assets versus 177 million in total liabilities. Now that doesn't necessarily mean it's the end of the world. I mean, game-changing companies like NIO and Tesla, these were both money-losing companies at the start, and now they're like multi-billion-dollar companies. And as we can see, Senseonics is actually taking massive steps to address the problem, as their partnership with Essentia will reduce sales and marketing expenses by approximately $45 million annually. So really, props to them for getting that deal done, but that's not necessarily going to fix the cash burn problem, because you have to remember that the company is working on a 180-day sensor and multiple other versions of that, and along with that a 365-day sensor. So research and development costs, all those different things, expenses, those are going to accrue over the years, and that is going to force them to further dilute shareholders by raising more capital. As we saw in January, the company raised a massive 175 million and now has 187 million in cash. So going further, I definitely see them going to be raising cash in the public markets, and I actually think they should be raising capital right now. At these points, the stock has ran up so much. I definitely think the company should be raising money so that they're set up that they can succeed for the future. But with that being said, that's going to be putting short-term pressure on the stock, and so you guys need to be knowing that that could happen, and that's something you have to be holding through. If you're a strong believer in the company like I am, you have to realize that these are the problems the stock could face, and these are the risks associated with it, because you can't just look at it like, oh
wow, Senseonics is amazing, there's no risk, nothing.
You have to be able to understand dilution may happen. The company has a lot of debts they need to pay off, and as a result, your shares might not be worth as much as they are right now. And so that's why it's important to understand these things. So now, where's the stock going from here? What's next? Before I jump into my technical analysis, I actually think that the stock could be heading higher in the short term, but we'll continue to consolidate for the next few months. The reason being is that there's not going to be any really major catalyst for the next few months. As it was discussed in the company's earnings call, the FDA will assign their file to a reviewer and place it under review no later than April 15th. And then after that, Senseonics expects approval in the 3rd or 4th quarter of this year. So that is still 6 to 8 months out, and the approval of their 180-day sensor will be a game changer. As for cash burn, showing the full year 2021 cash used in operations is projected to be in the range of 60 to 65 million. So you can expect the company to lose yet another 100 million again and probably another capital raise. That being said, long term by 2025, they are expected to be generating about 200 million annually, and so I could see this company worth at least 7 to 10 billion, representing a 10x from these levels, and by 2030, double that. If you want a more detailed breakdown of my price target, I highly recommend you check out my last video titled Why Senseonics is a Millionaire Maker. But before I jump into the technical analysis, if you guys want to learn technical analysis yourselves so that you can predict where it's going to bounce, where it's going to fall, and all these different reversal patterns, I highly recommend you check out the Gen Z Trader Academy link down below, where my goal is to help you learn technical analysis so that you can become more profitable. So be sure to check it out down below, and let's jump into the technicals. Alright, so jumping into the technicals for Senseonics stock on this daily chart, we can see a few things right off the bat. First of all, we can see how the stock formed two dragonfly dojis right over here, signaling that even though the stock came so low, buyers and institutions really stepped up big time to try to push the stock back up and close it in the green. And so that is super bullish to see. And if you go to the 1 month chart, we can see how the stock was forming lower highs and lower lows, lower highs and lower lows. It was just trading in this channel, but now recently we can see this stock has broken out of that channel, which is extremely bullish. Another thing that I'll tell you guys is that the stock is now holding the 9 EMA as support. But you can see over here when the stock would push up and turn the 9 EMA into resistance, which is the blue line, the stock would continue lower. Now we're holding the 9 EMA, which is the blue line, as support. Along with that, we can see massive volume stepping up again. We can see over here in this period of time, we can see how volume died down, but now recently, boom, massive buying volume and selling volume represented by these green and red bars. And so that's another thing you gotta like to see. And now that it's also broken out, we can see that the stock is now forming higher highs and higher lows, again signaling that the stock is now in an uptrend. This is a bullish reversal pattern. So now that you get an understanding of how the technicals are looking, let's talk about my price target and where I could see the stock heading. So if we continue to hold this 9 EM and continue higher, first of all, I could see the stock retest this $4 level. We peaked out at 4 over here, we peaked out at 4 over here, and way back over here. So that is going to be the first level of resistance. If we can break above this $4 level, then I could see the stock easily retest this $4.50 level where we peaked out over here. And if we break above $4.50, it could definitely be heading up to $5 right over here. However, if we do break below this bottom trend line, which is totally possible, and we end up dropping lower, I would be looking for the stock to be finding support around this 244 area where we had support in this general area. If we bounce over here and find support and then again resume the uptrend, then my strategy again would be buying into each dip. So make sure to like, subscribe, and check out the Gen Z Trader Academy link down below, and let me know what you guys think about Senseonics stocks, if you guys are buying more, all that good stuff, and I'll see you guys next time. Take it easy, clocking out for now. Peace.